So good morning and welcome to another edition of Dalama Insights, your weekly source for personal finance tips and market insights on Radio 4. I'm your host Leslie, and joining me once again is our resident expert, Mukonki Mukonkela from Insight Partners. Mukonki, so good morning and welcome to the show.
Good morning, Leslie. How are you?
Very well, thank you. And how are you?
Okay, how's Tuesday?
Yeah, we're getting into winter now, so
Yeah.
yeah, I'm not a big fan of winter. But apparently people love winter because you can control it. You can dress up warm, you can, you know. I love summer. Uh, yeah, but
Winter is cool.
I have problems with winter. Today, we're tackling an important topic for bond investors, looking at when the right time to sell is. Basically, we're looking at when to sell your GRZ bond investment. Now,
Mm,
there's several factors to consider, and then of course, Mukonki is here to give us a perspective.
hmm
Let's dive right in. As a bondholder, Mukonki, is it possible to sell your GRZ bond investment before the maturity date?
Yes, Leslie, it is. I know many of us, when we buy a GRZ bond, we always just think that we need to hold on to it until it matures or until, the last date when we had agreed to say we want our face value back or money invested back. But you can actually sell your bond investment even before its maturity date. So, for instance, if you had bought a 10-year bond and it has run 3 years of its life, and then midway you are faced with maybe financial difficulties, you could actually sell your investment in that bond. And we do that on the secondary market. So it's very, very possible. And the key really is to find somebody who's ready to buy your bond investment. Because remember, when you are selling your bond, you are now selling it to other potential investors on the secondary market. So they are now buying it from you rather than from the BOZ. So it's very, very possible for you to sell your investment in the bond.
Mhm. Now,
Mm.
now, what might motivate an investor, to sell before maturity?
So there are quite a number of factors, and they really all come back to you yourself as an investor and why you had invested. First of all, to start with, there are a few reasons that you could have motivated you to buy a bond investment that might have changed later on. For instance, you could have been looking at the return on investment, or let's just say the profit. And then, because of market circumstances, or because maybe conditions on the market have changed, and your expected return on investment has fallen, maybe because of the rise in market interest rates. As a result, your current bond is not as valuable as it used to be, and therefore your return might be lower than you had planned. You could then decide to sell that bond investment and consider other investment avenues that are earning you the return that you desire. So that could be one reason why. The other reason could be just because you need the money. A few years ago, you probably were well off financially. You didn't really need the money, so you had considered investing in long-term investments like government bonds. Maybe all of a sudden, financial circumstances have changed that now require you to get that money back. That could also motivate you to actually liquidate the investment in the bond and get your capital or principal amount that you had invested back. The other reason could be your strategy, and it's also linked to the first reason I gave. You could already have a strategy of how you want to build up your portfolio. And when you see that the circumstances are not helping you to build that portfolio, the bond investment is really not helping you, you could decide to sell your investment in the bond. So these are some of the reasons that could motivate you to liquidate your bond investment. But at the end of the day, I think what's key and central is that even as you start planning to invest in bonds, you need to have a plan. Because when you have a plan, you will know when circumstances change that this is now time for me to actually sell this bond investment.
Mhm.
Yes.
Now let's move to the next question. How does
Mm.
one actually go about selling their GRZ bond before maturity?
This is a nice question, Leslie, and it's really not straightforward for us in Zambia to find buyers in terms of government bonds. You see, ideally, bonds are supposed to be traded on the securities exchange, on the secondary market, and it's supposed to be really transparent. We're supposed to just log into maybe the LUCE and find all the bonds that are on the market, and we're able to buy or sell our bonds. But right now, it is not that easy. So the best you can do is probably sell through your stockbroker. So you need to approach your stockbroker. Again, this is another relevance of having a brokerage account. So we've got listed stockbrokers on the Luce. You can, if you are working with one already, you can actually ask them to find you a buyer, somebody who's looking to buy bonds. And the other one is your bankers as well. I mean, banks buy a lot of bonds, and I'm starting to believe that they buy lots of bonds because they're actually trading them on the secondary market. I'm yet to, because I started, this is a new thing for me, but then I'm yet to actually consolidate this finding. But I truly believe that they buy huge amounts of bonds so they can sell to their clients. So you could approach your bankers and find somebody who's willing to buy a bond. I mean, I've seen a lot of financial institutions now speaking about investments and all of that. I suspect this is an area where you can actually go to them and say, hey, I want to sell my bond, and they've already got other readily available buyers that can buy your bond. So those are the two main ways at the moment. However, we look forward to the time when we're going to have a developed secondary market on our bond market, so that it's easy for you to just log in and buy and sell without even going through the hassle of talking to your bankers or your brokers and incurring even further charges in the process. So that's not really easy at the moment, but that's how you go about it.
Now, when we're selling these bonds, do you sell them at their actual value, at the actual
Face value?
Yes, face value, or the amount originally invested, or is there a different price to the bond?
That's a very important question, Leslie. And this is one we're actually even going to cover in our training this week. So this week, Thursday, Friday, we are looking at learn about bonds and shares. So those that haven't registered, you can contact me. When you are buying or selling bonds on the secondary market, you might not necessarily buy or sell them at the face value amount or the par value amount as you had bought them in the primary market or through the Bank of Zambia. Remember, when you're buying bonds in the primary market, you are buying them at par value or face value. For instance, if you want to buy 100,000 government bonds for a 10-year period, the Bank of Zambia is going to deduct that exact amount. That is what we mean by buying bonds at face value or par value. However, on the secondary market, the price is determined by market circumstances. So you could sell your bond at a discount if interest rates at that moment have gone up. It means that the value of the bond that you're holding has come down. So you could actually sell it at a lesser price than you had paid for it yourself. And then you could also sell it at a higher price. If interest rates are very low and your current coupon rate is high because it was determined by market circumstances, then when you bought it, it means that your bond is valuable. So you could actually sell it at a higher price, which we call the premium. So the price of the bond when it leaves the primary market is dependent on market conditions, and you can actually start looking at some prices of bonds if you log into, I think, the Luce. It's interesting. There's a bond that I was looking at as I was preparing for this workshop that I won't disclose, and you find out if when you come to our workshop, that was issued in January and is trending at a premium right now. So that's interesting information that you can actually even get right now from the SEC. So once the bond leaves the primary market, the price is really determined by what they say supply and demand, but more so by interest rates and the performance of the economy. Are you confused?
This new coupon system where they're doing this auctioning.
Yes.
I know initially the way it used to be, you buy a bond, you've got your payment at the end of the maturity, basically at maturity. So for instance, if in those days you could buy a bond for 10 years and maybe you've got 17% coming to you at the end of 10 years. Then you've got your coupon value, which would be maybe 9% or 11%. So you'd be getting 11%, as your annual coupon value. This new system where they auction, does it mean your coupon value changes every time they auction, or is this coupon value fixed when you buy your bond at that moment for the next 10 years or 5 years?
Very good question, Leslie. Once you buy a bond, the coupon rate remains fixed until the maturity. And even if we are selling the bond on the secondary market, the person that's going to buy your bond, you've given an example of 11% as the coupon rate under the old method, right? So what it means is this 11%, you will get it for the next 10 years, even if market conditions have changed. The only thing that will start changing is the price of the bond. So if you are selling it on the secondary market, someone else could sell it even at a lower price or a higher price than you yourself had bought it for. That's what it means. But the coupon rate remains fixed until the maturity of the bond. So even if you sell it on the secondary market, the person who's buying it from you will continue getting the same coupon rate or coupon income until it matures. The only difference is how much they bought it from you. They could have bought it at a higher price or a lower price. That is what even affects the yield to maturity or the overall return on that investment. Now, talking about, I know you mentioned previously we used to get a 17% and then 11%. I think what you're trying to say is previously we used to get an income, what we used to call an interest income, which was the difference between the price, the face value of the bond and the price we were buying the bonds at. We used to buy bonds at a discount previously. In fact, right now, even treasury bills, which are short-term investments, are being sold at a discount. What that means is you're simply buying it at a price which is less than the face value. For instance, if your face value amount is 100,000 in the next 10 years, we were buying it perhaps at around 80,000 or something like that without getting the actual figures. So that meant that you are buying it at a discount. And then later on, a 10-year period, you're going to get 100,000 back. Now it is par value or face value, meaning that the amount that you pay is the amount that you get upon maturity. But that's just on the primary market. On the secondary market, the price could be at a discount or at a premium. Yes.
Okay, so if the rates, like for instance, on this new bond goes at 12%, when you bought yours, it was 17%. Yours is like what?
If the rates right now are at 12%,
yes,
so
what yours at, the rates were 17%.
Yes, it means yours is. Yes, yours is a hot cake, and you could actually sell it at a higher price because everybody will want your bond compared to the newly issued ones, isn't it? Yeah. So let's say if you bought yours last year at 17%, and then this year the ones that are the newly issued 10-year bonds are running at a coupon rate of 13%, as you've said. It means that yours is more valuable, and on the secondary market, it will sell at a higher price, which we call a premium. Yes. Is it clear?
Yes. Now it's
clear. Nice.
Are there any costs or fees involved when selling early?
Yes, they are. So first of all, nobody does work for free, especially if you're going to do it through a broker or through your financial institution. There will be charges that you're going to incur. But also there will be charges for the SEC. There's a levy, a commission of about 0.125% levy on every buy or sell that you make, that the Securities and Exchange Commission charges. And also the LUCE, because this is the secondary market, there are different tiered charges that the LUCE charges up to a maximum of 1,800. This is for investments above 1 million kwacha. And so costs are there, Leslie, but you need to weigh the reason why you want to liquidate and the cost. At the end of the day, you might find that they're quite minimal. Look at 0.125%.
So the idea is you will get your money somehow. You will get your money back. When you buy a bond, it's not a permanent fixture.
Yes, you should get your money back if you find, especially on the secondary market, if you find a broker and who's able to find you a buyer, or a financial institution who's able to find a buyer for your bond investment, you will get your money back. Yeah.
Now, our next question gets into some of the broader implications. What are the potential downsides to selling a GRZ bond early?
One of the downsides could be the loss of the coupon income. Remember, bonds, the nature of bonds is that you get coupon incomes for a specific period until maturity. When you sell it, you lose that regular coupon income because it now goes to the person that is buying your bond. And also, the reinvestment risk that you might face. Bonds are quite attractive, especially at the moment where we are looking at higher coupon rates. Let's say you bought a 10-year bond that was running at 24.9%, and then you decide to sell it. Where else could you invest that money and earn a similar return? So you could forego or incur that risk, the reinvestment risk of you being unable to actually find another investment earning you a similar return. And so these are things that you really need to weigh even as you consider selling your investment in the bond.
Now we cover off with one final question. From your professional perspective, when does it make the most sense to explore selling a GRZ bond for maturity?
From my perspective and how I'm approaching this personally, I'm starting with a strategy, Leslie. I've already told you. I mean, I believe in planning and having a clear strategy. So if I've determined that the return on investment that I'd planned to get on this investment is not what I'm earning from this current bond, it is low, I would definitely consider liquidating it. And perhaps look at this. Let's say interest rates have come down, Leslie, right? So you bought the bond at 25%, and interest rates, rather than going down, have gone up. Interest rates have gone up to 30%, meaning that your current bond is not as valuable, right? So I could actually sell it and buy a new bond at 30%, right?
So the small loss that you have is covered by your coupon.
By the increase the coupon rate that is on the newly issued bonds. You get it? So I bought it at 25%. Interest rates have gone up to 30%. I could sell the bond that I'm holding, which is earning me 25%, and then buy a new one, which is going to earn me 30%. You get it? Yeah. So as long as I'm able to find somebody who doesn't follow the Ndalama Insights Radio program on the secondary market to buy my bond.
Yeah, very interesting indeed.
You get it?
Yes, we definitely do. But this looks like it'll be a very interesting workshop that you'll be training actually.
Yeah.
For people that want to buy bonds. But how's the response going so far?
Oh, it's fantastic, Leslie. It's fantastic, and I'm satisfied with the people that have registered. They are eager. One of the feedback that I got was, we actually want to implement what you've been telling us. I'm ready to implement what you've been telling us. So this workshop is starting in the next 2 days. Thursday, we are looking at government bonds, step by step, how you can buy your first bond if you don't have one already. If you already have a bond, how do you assess its performance? How can you, if you wanted to sell it on the secondary market, what are the steps of liquidating that bond on the secondary market? So we are covering that on the 16th this week. On the 17th, we are diving into the shares. And I know there have been a lot of requisitions. Other people want us to do evening classes because we are working. Other people want to do Saturdays. Seeing that this is the first time we're doing this training, I've accommodated the Saturday class, but all other requisitions will come in future trainings that we're going to be conducting. But very, very interesting feedback that I got, Leslie. And can I just say one other feedback that I got, which really made me laugh? Somebody read the prospectus for a bond, I think for last month, for April, and then they called me like, Mukonki, the deadline is this date. Does this mean government will never ever issue bonds again, and I'll miss this deadline, and I need to find money to invest? I said, no, as long as government needs money to build roads, to build schools, to build hospitals, they will always borrow. And there's no government, all governments in the world borrow. The United States right now is in debt over trillions of dollars. Every government borrows. And as long as governments continue to exist, government bonds will forever be there. So don't be in a hurry. You can always invest next month. It's never too late.
A monthly thing, so it's not like it happens every month. It's been happening every month from the time Zambia was invested.
I know. So it was interesting to hear that somebody asked that question. I was like, wow, but at least we are getting to understand how these things work. So it was really, really a very important question. So those that are interested in attending this workshop, Leslie, let me just conclude by giving out my contact details. You can contact me. Today is the deadline, by the way, and strictly, I'm not taking any further registrations after today. So contact me on 0977 44 56 04, 0977 44 56 04. It's very important that you give me a call. Sometimes I might not respond through the WhatsApp or text messages because I'm quite busy. But if you give me a call, I might give you the instructions on how you go about registering quickly, and then we continue with our day as we prepare for this very exciting 2 days that we're going to have online.
All right.
Yeah.
So that's how you as well can register for that, and that's today. Last day today.
Today's the last day, and honestly speaking, please don't call me tomorrow. Don't call me on Thursday itself. I will not pick up your call, and don't say, but Mukonki, don't pick up my calls. No, no, guys, it's too much work. So we have to have a deadline.
Mukonki, thank you very much for coming.
I hope you join us, Leslie, though. Okay. I'll send you the link. So we will be sharing the link to our training room, Zoom training room, from today. Actually, no, from tomorrow, so that we make it secure. I will send you a link. I hope to see you.
Definitely, I'm doing it. This is important. We keep telling people that start even with 1,000 kwacha. It's okay. The important thing is there's a joy to registering. After you've registered, it's just there's a joy to registering. There are a lot of small challenges that you're going to learn about. These things like the signatory, who's the one.
And I get that question a lot. How do that signatory mandate? What do I do?
Exactly. I think these are the things we're going to be learning about on Thursday and Friday. So please do be part of that training. Thank you very much, Mukonki, for coming through.
Thank you, Leslie. Have a good morning.